You'll be surprised that most people have never taken time to actually understand their strategy, to find out what's their win rate, what's the average risk reward ratio, and what's the average loss ratio, right? So in today's video, I'm going to share with you guys this very important aspect about trading, which talks about the probability of having consecutive losses within 100 trades. So let me break down everything right here. All right, so what you have here on this side right here is the win rate of your strategy, and then on the side right here is a chance of you having a consecutive number of losses at any given time, right? So let's go into it right now. So you can see that right now, for example, if you have a 50% win rate, it means that there is there's a 100% chance of you having two losses in a row, and you have 100% chance of having three losses in a row. You have a 95% chance of having four losses in a row, and then you have a 77% chance of having five losses in a row, and then you have also a 51% chance of having six losses in a row consecutively. All right, and then you have a 29% chance of having seven losses in a row, and the list goes on, right? So of course this is going to be different depending on your win rate. This is what's going to determine how many losses you're going to take in a row. So the higher the win rate, the less the number of losses you're going to be able to take on a consistent basis. For example, if you have an 80% win rate, right, it means that the chances of you having five losses in a row is like 2%. So the higher the chances, the higher the win rate, the lower the chances of you having a higher consecutive number of losses in a row. So it's very important that you understand this concept, because it's going to help you understand how to handle your emotions when you are trading. Because once you expect some of these things, it will be very easy on your mind, it will be very easy on your psychology, because you'd actually expect it. Unfortunately, if you've never seen something like this, and then you are taking 3-4 losses in a row, you'd be discouraged and you'll be kept in a loop where you are continuously changing strategies from strategy, right? You've seen people who've been trading for over 5 years and they keep changing strategy over strategy. They jump to this strategy because this strategy doesn't work. After 3-4 months, again they try another one because they think there's somewhere out there there's a strategy that doesn't lose. Unfortunately, that's a lie that people were taught, right? They think that somewhere there's a strategy that wins 100% of the time. However, it's all about two things. It's all about having a higher risk reward ratio or a higher win rate. So you can have these two both, right? So you have to choose. Do you want a higher win rate or you want a higher risk reward ratio? You can't have them both ways. So you have to understand that you can't have it, right? So it's really important that you have something like this. This is all over Google. Just Google it, and you actually just be able to actually get it. So that have it somewhere, so that whenever you're having losses, you can look at it like, okay, for example, we have like a 55% chance of, a 55% win rate, right? It means that with our strategy, it's very normal for me to have 5 losses in a row. It's about 58% chance it's going to happen. Like the chances of me having 4 losses in a row is of like 86% chance. But however, if you look at my win rate and my risk reward ratio, I can lose 7 out of 10 trades, right? And those 3 trades I'm going to win, those 3 are going to make me massively profitable, because I don't take any trade that gives me less than 1 to 10 risk reward ratio. It means on just one trade that I'm going to win, I'm going to actually make much money on that. So it's really important to actually understand your numbers, have them on your fingertips. You should be able to understand this, that even when you are going through the losses and everything, you know that this is actually normal. I like talking about Mark Douglas because he actually brought the concept of probability, which is very, very important. At some point, we go into the market because we have certain confluences in the market. The chart pattern has given us everything that we want in the market, and we assume that trade is actually going to work out. But most of the time, it doesn't, because the outcome of every single trade is random. It's like a coin flip. If you flip a coin right now, there's no one who can tell you with 100% certainty what's going to happen in the market. Why? It's because the outcome is random. But if you flip that coin 10,000 times, there's a high chance of you having over 50% wins and 50% losses. But those winning trades and losing trades won't come in a sequence. That doesn't mean that when you have a 50% win rate, you're going to have 50% wins consecutively and 50% losses consecutively. No, the outcome of every individual trade is random. So what does it mean? It means that when you take a particular trade, you don't know what's going to happen, and nobody knows what's going to happen. The outcome is random. You can take the same trade today, have a nice 10-hour trade, take the same trade tomorrow, you may actually lose, right? Because the outcome of every individual trade is purely random. Our job as traders, as speculators, is to simply follow our age and make sure we understand exactly how much money we are standing to lose on that individual trade, and do that consecutively, do that consistently. That's what's going to keep us in the game. And also us having a higher time frame mindset, where we're looking at a larger sample size, some kind of mindset where we're looking at a larger sample size. Don't judge yourself after 2, 3, 4 trades. That's just too small of a sample size. Judge yourself after taking 25, 35 trades, 30 trades. See how you've performed. If you still lose out of that, then you have to evaluate your strategy, because most likely there's something happening. But if it's within your data and it shows that that is normal, and you can actually see that, for example, if you have a 60% win rate and you're having 6 losses in a row, you can see that there's actually a 17% chance of you having that, and 17% is not small. This is actually big. So you have to understand these numbers, guys, and always, like I always say, make sure that you know exactly how much you are risking on an individual trade. Know for sure, in this particular trade that I'm taking, I'm risking 0.5%, and this 0.5% is equivalent to $100, $200. Know that exact number, and when you mention that number, you should be okay with that number. The moment you're not okay with that number, what's going to happen is that every time the market starts moving in a direction, you keep on checking your phone. Every second you want to see what is happening in the market. How you know you really accepted the risk of that particular trade is if you can just let the trade be, forget about it. It shouldn't even bother you. You should be able to sleep just fine without you actually wanting to see what is happening with that particular trade. The moment you start to wake up in the middle of the night just to see how the trade is moving, just know that you over risked on that particular trade. Find that comfortable space and where you're able to actually risk that amount on a consistent basis. Always use a position size calculator every time. That's going to prevent you from having a lot of losses, guys. You have to understand that this is a game of probability. It's a game of long term. No one knows exactly what's going to happen. It's all about following our age. Technical analysis is the use of patterns, and these patterns are the same or similar. However, the outcome of the occurrence of these patterns are very random, and the sooner you understand that, the better. All right, so it's really important that you understand the statistics. What is your win rate? What is your risk reward ratio? What is your average risk reward ratio? Know all those things, so that once you come in the market, you are just coming to execute, because you've done the work. You have back tested, you have forward tested, and you've proven that the strategy actually works, such that you're not phased out even if you have 3-4 losses in a row, because you understand that that's actually normal, because you've done the work. The moment you start doubting your strategy, just means that you've not done the work, because when you've done the work, you won't even hesitate to execute next trade, because you not understand that next trade is the most important trade that can happen, because that same trade can be the trade that you were waiting for. All right, so it's really, really important. If you'd like to actually get this, I will leave my Telegram link in the description. Text me and I'll be able to give you this for free. And if you can easily just get it on Instagram, on Google right there. You can just simply search for it and you'll be able to find it. I just thought of sharing this very, very important thing right here. So I hope you found value in this video. And if you have, make sure you subscribe, like the video, comment in the comment section. Until next time, goodbye.